The economic landscape in the United States currently presents a complex and somewhat contradictory picture, particularly when examining recent consumer confidence reports. While one major indicator shows a sharp decline, another signals a surprising rebound, leaving Americans and economists grappling with mixed signals about the nation's financial health. This divergence underscores a prevailing sense of uncertainty, largely driven by the ongoing impacts of tariffs, evolving economic policies, and persistent inflation concerns. According to data released by the Conference Board in June, consumer confidence experienced a notable retreat, dropping to a reading of 93.0. This decline of 5.4 points from May's 98.4 erased nearly half of the previous month's gain, surprising economists who had anticipated a small uptick. The index has now reached one of its lowest levels since early 2021, and even since the depths of the COVID-19 pandemic 5 years ago. The weakening sentiment was observed across all political affiliations, but it was most pronounced among Republican respondents. A closer look at the Conference Board's components reveals a deterioration in both present and future outlooks. The Present Situation Index, which gauges consumers' assessment of current business and labor market conditions, fell by 6.4 points to 129.1, marking its lowest point since October 2024. Consumers were less positive about current business conditions and job availability compared to May. More concerning is the Expectations Index, reflecting short-term outlooks for income, business, and labor market conditions, which dropped by 4.6 points to 69.0. This figure is significantly below the 80-point threshold that historically signals an impending recession within the next year. Indeed, nearly 70% of consumers surveyed indicated that they believe a recession is likely in the next 12 months. The share of respondents anticipating better business conditions fell by the most in over 2 years. The primary drivers of this pessimistic sentiment, according to the Conference Board, are tariffs, which remained on top of consumers' minds and were frequently associated with concerns about their negative impacts on the economy and prices. Warnings from major retailers like Walmart and Best Buy about potential price hikes due to these levies are adding to consumer anxiety. Federal Reserve Chair Jerome Powell has also noted that individual items, such as electronics, have already become more expensive. While inflation expectations for the coming year eased slightly to an average of 6.0%, down from 7% in April, high prices continue to be a significant concern for many consumers, especially when coupled with tariff discussions. The Organization for Economic Cooperation and Development, OECD, even projected U.S. inflation to reach 4% by the end of 2025. Beyond tariffs and prices, other factors contributing to the decline include President Trump's aggressive and unpredictable policies and rising tensions in the Middle East. Although references to geopolitics and social unrest increased slightly, they remained much lower on the list of consumers' concerns compared to tariffs and inflation. The survey's cutoff date for preliminary results was June 18th, before the U.S. targeted Iranian nuclear sites, but after Israel's bombing of Tehran. The labor market played a role in the downturn of confidence as well. While consumers remain positive about current job availability, aligning with recent data showing continued hiring, their outlook for future job prospects weakened for the sixth month in a row. This suggests potential softness in future hiring trends despite the historically low unemployment rate of 4.2% and the addition of 139,000 jobs in May. Consumer pessimism also extended to future business conditions and income prospects. In response to this cautious outlook, many Americans are adopting an abundance of caution economy. Consumers are becoming more hesitant to make big purchases, often sitting on the sidelines and only buying items like homes, cars, and appliances if absolutely necessary. Purchases of electronics and homes are being put off by more consumers, with existing home sales for May dropping to their lowest figure for that month since 2009. While car and appliance purchases have held relatively strong, spending intentions for most services have weakened, with dining out being one of the few exceptions. The savings rate in the U.S. has increased since December, which is typically an indicator of a lack of confidence in the economy. Furthermore, 57% of Americans expect interest rates to rise in the coming months, the highest share since October 2023. In stark contrast to the Conference Board's findings, the University of Michigan's Consumer Sentiment Index surged by 16% in June from May, marking its first increase in 6 months. This broad-based improvement touched expectations for personal finances and business conditions, which climbed by 20% or more. Despite these gains, sentiment remains 18% below the post-election bounce seen in December 2024, still considerably consistent with expectations of an economic slowdown and future inflation. This rebound in optimism appears largely driven by President Trump's recent rollbacks of some tariffs, including a trade agreement with China that had previously triggered a stock market surge and softened forecasts for a downturn. Consumers' fears about tariffs impacting future inflation also softened somewhat in this report. Notably, inflation expectations in the University of Michigan survey saw a significant drop, with year-ahead expectations falling to 5% from 6.6% in May, and long-run expectations receding to 4% from 4.2%. Both readings are the lowest in 3 to 4 months, though overall inflation risks are still perceived as elevated compared to late 2024 readings. This survey also noted that consumers do not appear to be connecting developments in the Middle East with the economy. This dichotomy in consumer sentiment creates a challenging environment for the American economy. The Federal Reserve, observing this volatile landscape and the potential for tariffs to lead to stagflation, where inflation rises and the economy slows, has opted for a wait-and-see approach, holding interest rates steady. Powell acknowledged that tariffs would likely push up prices and weigh on economic activity. Industries are feeling the impact differently. In the auto sector, hybrid vehicles are driving sales increases, with Toyota and Hyundai Kia leading the shift. However, automakers face headwinds as tariffs have pushed production costs up by an estimated $4,275 per vehicle, forcing a delicate balance between price hikes and affordability. The retail sector emphasizes firms with pricing discipline and exposure to essential spending, with companies like Amazon and Apple seen as defensive plays due to their pricing power. Discretionary retailers like Nike might face challenges as consumer caution affects non-essential spending. Interestingly, discount retailers like Dollar General have seen a surge in high-income consumers trading down for value. The broader economic data reinforces some of these concerns. Real disposable income declined in May for the first time in several months, leading to a 0.1% nominal decrease in personal consumption expenditures, with durable goods taking the biggest hit. Despite current job growth, recurring jobless claims are at a 2-year high, and a Richmond Fed official warned that tariff-driven cost pressures could force layoffs, indicating potential labor market fragility. In summary, the American economy in June is characterized by conflicting signals: a significant drop in confidence, according to one prominent survey, driven by tariff and recession fears, juxtaposed with a surge in sentiment from another, buoyed by tariff rollbacks and easing inflation expectations. This complex environment necessitates a cautious outlook as consumers continue to adjust their spending habits amid persistent uncertainty about prices, jobs, and overall economic stability. And there you have it, a deep dive into the fascinating yet often contradictory world of U.S. consumer sentiment this June. We've seen how factors like tariffs and recession fears are weighing heavily on some Americans' minds, leading to a cautious, abundance of caution economy where big purchases are on hold. Yet, at the same time, tariff rollbacks and easing inflation expectations are sparking optimism elsewhere, driving a surprising rebound in sentiment. What do these mixed signals mean for our economy, from the auto industry to retail, and for your wallet? It's clear that vigilance is key in these uncertain times. We'd love to hear your thoughts. Are you feeling more or less confident about the economy right now? What are your biggest financial concerns? Let us know in the comments below. If you found this analysis insightful, please give this video a thumbs up, share it with a friend, and subscribe to our channel for more in-depth economic updates and market insights. Don't forget to hit that notification bell so you don't miss our next video, where we'll explore the Federal Reserve's next move and how these trends might impact the holiday shopping season. Thanks for tuning in, and until next time, stay informed and stay savvy.